Hey guys, welcome back. We are going to see one problem from June 24 paper, and this is from the incomplete records 14 mark problem. But this is one of the type 1 base level problem from incomplete records. We can easily score 14 marks out of this problem, and this is rare kind of problems which has been asked in the incomplete records. Mostly there will be a longer problems, longer kind of we have to open multiple ledgers and find out the all kind of debtors, balance sheet items we have to find out usually. But here this is a base level problem. We can easily solve this problem without any no efforts. Okay, so what is incomplete records? Is incomplete records are we are not given with the informations to find out the profit directly. We are given with the opening balance sheet details and closing balance sheet details. With that we have to compare and we have to find out the profit or loss we have achieved over that period. Okay, so in this problem they are given that Shogun is a small trader and does not maintain its books on double entry system, right? So he does not maintain the double entry system, and he has given with the we are given with the details of opening balance sheet to find out the opening capital and closing balance sheet to find out the closing capital, right? Comparing this with the adjustments given provided in the question, we have to solve this problem, right? So let's quickly get into the problem. Okay, Shogun is a small trader, does not maintain his small books on double entry system, and we are given with the details of opening balance sheet, right? Okay, so what are all the things we have to read when it comes to this question is the adjustment area. Shogun had withdrawn 3 lakh, which is drawings, during the year. He has introduced the fresh capital, which is additional capital, on 1st October 2022. Okay, on provision of 5% on debtors, sundry debtors is necessary. So he is provision for bad and doubtful debts, and rate of depreciation plant and machinery at the rate of 15% per annum, and furniture at the rate of, all these details are provided for closing balance sheet. Okay, opening balances are already adjusted. We have to adjust for the closing balance sheet. Okay, closing this here we are not say it as a balance sheet. This is the statement of affairs, because this is not come from the trial balance. We are preparing it out of the informations that required for balance sheet. So these are all the things which has been required for balance sheet. So we are not actually taken out of the trial balance. So this is not the balance sheet. So this is statement of affairs related to balance sheet. That's it. Okay. Then interest on opening capital to be allowed at the rate of 10%. Okay, the manager is entitled for the commission at the rate of 10% on net profit after charging such commission, right? So they have asked for ascertain Shogun's profit or loss for the year ended 31st March 2023, right? So what are the information we have given? We are given with statement of affairs. Let's quickly open the statement of affairs to find out the opening capital. The steps are 3-step approach only. Statement of affairs as on 1/4/2022. Statement of affairs as on 31/3/2023, right? Okay, then balance sheet, sorry, not a balance sheet, ascertainment of profit. First two steps contributes the line items for third step. So first steps will give us the opening capital, second step will give us the closing capital, third step will help us find out the profit or loss during the period. Okay, right? Let's quickly open the first step, which is statement of affairs as on 1/4/2022, right? So what are all the informations given? Cash in hand, no cash in hand. Bank balance the two credit balance. So this has to be come here. So which is bank OD. If bank has credit balance, that is bank OD, so 74,000. Then sundry debtors, which is 5,30,000. Then we are given with the creditors, which is 1,50,000. Then stock, which is 1,70,000. Then investments, which is 1,20,000. Then plant, 2 lakh. Then furniture, 14,000. Okay, so we have filled all those informations. What else? What are the things which is missing here? Which is our opening capital, that we have to find it out as a balancing figure. So let's find out the capital value, which is opening capital balancing figure. Okay, so 14,000 minus 74,000, 1,50,000, just 8,10,000 is the opening capital. Same like we have to do for the closing balances also, but with the adjustments we have to make. 31/3/2023. Okay, cash in hand, how much? 1,000. Bank balance is 40,000. Next, sundry debtors, 8,80,000. But in the questions we have given with the 5% provision that we have to deduct. Okay, sundry debtors is 8,80,000. Minus provision, which is 5%. 8,80,000 into 5%, which is 44,000. Deduct that. 8,36,000 is the sundry debtors. Sundry creditors is 1,95,000. Okay, sundry creditors 1,95,000. Yes, then stock 1,90,000. Investments 1,35,000. Then plant 2 lakh. For a plant we have to provide the 15% depreciation. See, 15% depreciation, and furniture 10% depreciation, right? Okay, plant how much? 2 lakhs. Minus depreciation at 15%, right? 10%. Sorry, 15% only. Okay, plant is 2 lakh into 15%, which is 30,000. 1,70,000 is the plant balance. Then we have furniture, and furniture 10% depreciation. Which is 12,600. Okay, any other? Over this one, over provision. Then balance is with drawings, and then fresh capital, additional capital, and the interest on opening capital. These things are all used for our profit, and while we are computing the ascertainment of profit, and then manager's commission also provided here. Okay, now we can directly find out the closing capital. 1,000 plus 40,000 plus 8,30,000, sorry, 8,36,000. plus 1,90,000 plus 1,35,000 plus 1,70,000 plus 12,600 minus 1,95,000, which is 11,89,600 is the capital, closing capital. Okay, then we have got the closing capital as well as the opening capital, right? What else we have? We have to find out the profit, ascertainment of profit or loss. Okay, you can put it as statement of profit or loss for the year ended. Year ended which year? 31st March 2023. Right? Yes. Particulars rupees. Okay, what's the opening capital we found out? Usually what we do in financial statements, right? So opening capital we add profit, we deduct the drawings, same like we have to do here. Okay, opening capital is how much? 8,10,000, right? 8,10,000 minus drawings. How much is the drawings in the question given? Just 3 lakh. So 3 lakh is the drawings. How much is the fresh capital? Fresh capital has to add it, right? Further capital, which is 65,000. Okay. Right, 65,000. And then any other information? Interest on capital has to be provided. Interest on opening capital. See, we should not take the entire capital, we should only take the opening capital at 10% per annum. Deduct interest on opening capital. What's the opening capital? 8,10,000 is the opening capital. How much is the opening? 10% is the percentage, which is 81,000 is the interest. Any other details we are given with? Okay, closing capital we have, right? Now we can directly deduct the closing capital. Till here we can find out the balance, and then we can proceed with the closing capital also. 8,10,000 plus minus 3 lakh plus 65,000 minus 81,000. Okay, 4,94,000 is the balance minus closing capital. Closing capital is 11,89,600. Because interest on capital should not be deducted, it should be added back. Okay, because the interest whatever generated on the capital has to be retained in the business itself. This is not they have said as they are withdrawing the capital interest or anything, so we can accumulate the interest also to the opening capital itself. Okay, so 8,10,000 plus 8,10,000 minus 3 lakh plus 65,000 plus 81,000, which is 6,56,000 minus 11,89,600, which is 5,33,600 is the difference. Okay, this is the profit before charging manager's commission. Okay, then we have to deduct the manager's commission. How much is the manager's commission? 10% on profit after charging such commission. at 10% after charging such commission. Okay, after charging such commission means this is the value in that 10%. Okay, then what should be this? If it is 10%, if this is 100%, this should be 90%, right? How can we find it out this? 5,33,600 into 10, this will be 90. Okay guys, this should be like, this is the 100% and this is 10%, and this should be the 110%, because the manager's commission is after charging commission. So we need to take the 100% as the 100% of the before charging net profit, before charging the profit, before charging commission in the profit, and then we have to deduct the commission, and then we'll get the profit after commission. This is the actual net profit. Okay, so 5,33,600 divided by 110 into 10%, which is 48,509. Then if we deduct this, we'll get the 4,85,091. This as the profit. So when it comes to the calculations like commission and manager's commission at 10%, we should make the value which is after commission, which is after charging that commission, means we have to take the base value as 100 and the net and the rate of commission which has to be added with that, and that the given value we are going to find out should be the 110%. Okay, then only we'll get the correct figure. And this is how the problem should go, and this is one of the type 1 problem from incomplete records, easiest problem only. So you guys have seen that how we have done this, the 3-step approach: statement of affairs to find out the opening capital, statement of affairs on ending on the balance sheet end date to find out the closing capital, and we have to find out the ascertainment of profit with the closing opening capital and closing capital we found out. Okay, we'll input there in the third step and we'll get the profit. Okay, we are given with the opening details and closing details, closing balance sheet details. So with that we found out the opening capital and closing capital as adjusted with the adjustments which has been given in the adjustment area. So we have done. Then we have found out the profit or loss for the year. The key catch in this problem is interest on capital as should not be deducted, because it's accumulated to the opening capital itself. If it is withdrawn, then we have to remove this. Okay, then we have got the profit before commission, which is 5,33,000. This should be taken as the 100%, since because the manager's commission which is on the net profit after charging such commission, so it has to be 100, and then we have to take the manager's commission as on 10%, and total it will get the 110% as the profit after commission, which is net profit after commission. This is what the answer is. So this is how the problem should go. Thank you.